Good afternoon and welcome to Real Estate Radio Chattanooga on 102.3 FM, The Talk Monster. I'm Richard Smith, the host of Real Estate Radio Chattanooga, and today we welcome Vicki Phillips as co-host. Vicki is one of the area's top mortgage originators.
Hey y'all!
Each Saturday afternoon from 3 to 4 we bring you local experts to provide up-to-date and accurate information about our housing market and our home finance markets. Today, I'm very excited to have Randy Durham, a well-known and respected top real estate agent in the area, and this year, the president of the Chattanooga Association of Realtors. Randy will update us on the local home sales trends. Welcome, Randy, and thank you for joining us today.
I'm glad to be here. I'm glad you invited me. This is going to be a fun show today. We've got a lot to talk about.
We do. Randy is the lead agent of the Randy Durham team of Keller Williams. Vicki's number is 320-8208. Randy's number is 593-2400. His website is www.randydurham.com. Before we get started on the local housing market, Randy and Vicki, I wanted to ask you both about the two significant changes that FHA is implementing soon. Number one, this week FHA announced specifics about its changes to the upfront and monthly mortgage insurance premiums. And two, last month FHA announced that it had opened up the comment period for discussion about its plans to lower seller concessions on home purchases from 6% to 3%. Vicki, we talked about that second point last week's program.
Right.
Randy, how important is FHA lending to our housing market?
Well, I think that in this market, the Chattanooga, North Georgia area, has a number of home loans. Don't have exact percentages, but an overwhelming large amount are FHA. So most buyers are taking the FHA route. What they need to do as far as qualification and money down and things like that. So any impact of that is going to cut to the buyer pool.
And we don't need to lose any more buyers, that's for sure. One of the best things about FHA, of course, is its low down payment. And it's got attractive rates now. But one of the other great things had been its mortgage insurance premium. It was actually relatively low compared to conventional, wasn't it?
Yeah, it was about half of what the conventional mortgage insurance premium is.
The specifically though about the seller concessions, 6% to 3%. Now that's not going to impact quite so much, say a larger size loan, but what's our median income, our median price range, Randy?
Around 130, so if you're looking at a 130 purchase price, then the closing costs associated with that is going to run higher than that 3% mark. You know that as well as I do.
Yeah, plus you have prepaids, the taxes and insurance escrows. So it used to be you could get all of that in the sales price of the contract price. If this goes through, in addition to the 3.5%, which that was increased last year, wasn't it?
Mm-hmm.
That was lower before,
right.
It was 3%. And at one time you could actually make it 2.25. That's right. So what we're talking about now is the increase in the down payment from say 3% roughly to 3.5% happened a year or so ago. And now with the seller concessions coming down for over half of our market probably is going to have to come up with some of the closing costs plus their prepaids, which will be a pretty healthy increase in the amount of money to
it's going to force the buyers to dig deeper in their pockets and have more in their savings and reserves to be able to make a transaction happen. Just it's making it tougher for home ownership. If you're saying to the buyer, first off, we want you to have a 3.5% down payment, they've got skin in the game there with that.
I hate that phrase, skin in the game. It gets sicker every time I hear them talk about that.
But you know, now you're going to add a lot more to it with the additional closing costs and the median price of the home sales.
And as we said, over $200,000, you probably have enough in there in the seller concessions at 3% to cover most of the cost. But particularly if you're going to be a $100,000 purchase, it's going to be an impact. That is not yet implemented. I think the comment period, I think it's window dressing, but I think we should comment anyway. If you, there is a comment period, at least another 10 days or so left on it, I think.
They opened it for a 30-day comment period.
I need to check again, but I do still think it's the August 17th is the comment period. On my website, I'll have, and on my Facebook page, I'll have the link to this. I've run it a couple times. If you are interested in commenting, though, I think it'd be a good thing to do to let them know that we're at least not liking it. They may still do it anyway, but we can at least tell them we don't like it. The mortgage insurance change, though, while the seller concessions at 3% may be okay for $200,000 or higher sales price. And what's the FHA limit? What is the 270? 271.50. The mortgage insurance premiums, though, are going to impact everybody, regardless of the loan amount, and not just the median and lower prices, but also the higher ones. The way the new mortgage insurance premiums are, they're dropping the upfront from 2.25% now to 1%.
Right.
But they've almost doubled the monthly. The net effect that I've run is really about a $30 to $40, even $50 increase in the payment, which can impact your budgets. It can even impact your qualifying in some cases.
And with the city raising their property taxes and the new mortgage insurance, that's both impacting the amount a borrower can qualify for.
Randy and I were talking about that, I think, a little bit ago, about the property taxes. We'll get to that, I hope, on today's show, what the local CAR tried to do to help us with that. If you want to comment on the proposed seller concessions, on the change to the proposed seller concessions, like I said, we'll post that on Facebook, on my Facebook page. It'll be on my website, richardsmithhomeloans.com. Maybe we can get that comment link out to more people. And if more people than just industry professionals comment on it, maybe somebody will pay attention.